Can you hear me there? Oh, geez, I must have been talking to myself then. Sorry about that. Just let me know if it's coming through clear now. Okay. Did it just drop out, or was I talking to myself for a while? We keep an eye on that. We can't see anything. Can you see? Okay, just let me know if you can hear me now, guys. I've got the good old-fashioned heavy-duty mic going now. I'll get rid of this. Good work. Alright, and you should be able to see the screen now. Bit of charts and bits and pieces. Oh, fantastic. Well, that was a bit of fun, wasn't it? I don't know what happened there. I reckon on the weekend I've had the headset on the charger incorrectly. It just went flat. That's good to know, isn't it? I'll put that back on there. Now we'll start from the start again. We'll get back to the start. Just talking about the US on Friday night. Did pretty well. They did pretty well. We're just struggling along at the moment. What do we do? Up 14 points at the moment. We were up about 30 or so at one stage. I'm finding personally, from what I'm looking for, in the stocks I'm looking for yield, I'm looking for some sort of momentum, a bit of action. I'm finding there's a lot that they're kicking higher. They're grinding higher. Some that have been in the trend for a while, but I just feel that they could be. Some of those are really well placed for a bit of a rollover if this market gets out of hand a bit, if the pressure comes on. But at the moment, it still looks like the US is ticking higher. They're coming out with a potential rate cut. Well, it's all but locked away, I guess. One rate cut in the US. Now, there'll be a major focus on what the Federal Reserve says, what's his name, Powell, what he talks it up. Because if he talks it up, there's been some good numbers. GDP come out which strengthened the US dollar. GDP come out sort of that mid-range. It slowed down, which is not a good thing, but it was a lot better than expected. So it wasn't as weak as expected, which is, sort of a positive for the US dollar. It's a negative for further rate cuts. So a lot of people are around in the US talking whether they're, is at the start of a rate cut cycle over there. They've got nowhere really to go. That's a bit of a problem. But, start of a rate cut cycle, there's going to be a few in the pipeline. Or is it just because of what's happening with trade? Trade's pressuring the market. Some of the numbers that come out not so good. It's a bit of a, I guess, preemptive strike from the Fed to cut rates, and whether that's just going to be enough, and whether the numbers coming through are going to be good, I think that could be detrimental to the share market. We'll have to just wait and see how it plays out and how they react on it. Was it Thursday night? Not so much whether there's going to be a rate cut. We expect a rate cut in the US, and just to see how they react to the comments from the Fed, whether he's going to be bullish, what he's going to say, what's going to be in the statement, and how the market's going to take that statement. Of course, that reflects over here where I seriously think the ASX is a bunch of bears. They sometimes dress up in their bull suits, but pretty much a bunch of bears. We just don't kick along as strong as a lot of other markets. I think we're led around by the funds, obviously, and whether the funds are positioned into the market or not, who knows? But it's not getting that sort of... It is... I mean, if we look at the ASX now, that's from the start of the year. It's been grinding higher. We're getting a bit extended up here. It seemed to be that we're leading the charge more than anything else. As in just dragging, we're kicking high and the US kicks higher. Then we stalled a bit on, was it Friday? Going into long weekend. Going into the weekend, which is, I guess we can understand that. Going into the weekend, no one really wants to hold too much risk over the weekend. We've got Trump still talking about a weaker US dollar. So they've got, the rest of the world's got an unfair advantage because they're pushing their currency lower. I mean, you forget what the US did over the GFC. They were really devaluing the currency. They were smacking it around. So, but when it suits them, that's fine. But that was going potentially if the government stepped in to devalue the US dollar, then that was going to be good for the market. Keep the US dollar down. Probably good for us as well, but it looks like the government's come out and said we're not going to jump in and do anything. It's going to happen by, I guess, natural mechanisms, by market mechanisms rather than anything else. So yeah, what does it all mean for us? I think obviously the market's getting a bit overcooked up here. You can see the weekly's been overextended for quite a while. It could keep staying that way. You're going to get these pullbacks. We didn't really get too far ahead. I'm still waiting to see if we can trade up to the all-time highs. What did we get to today? 68.23, so we're at 68.50 and a half, I think was the all-time high. We're just within, touching distance of that all-time high. So I expect it to get hit, to spike up through the all-time highs in the ASX, break into new all-time highs, but then it'll be interesting just to see what happens. There's a lot of momentum stocks that have just been grinding higher since the start of the year, and they're still grinding higher, but it just, the way I'm looking at it, when you get into the new all-time highs, and the market's you got some stocks that have been pushing higher for a long time. It's pretty much a well-known fact. I just feel that if this market tips over, we get problems in the US. There's a lot of tariff problems around. China and US talking now about trade and whether they, that could easily kick off those two countries being pig-headed, can't come to some sort of agreement. All of a sudden, there's volatility back in the market, dragging us around. So to get into stocks when it's a well-known fact that they've been trending high, there's a lot of fuel to get back out if things turn south quickly, which is going to happen quick. I suspect when it does, it's not going to be because everyone's sort of waiting for something to happen. Our market's poised, even though it's trending high. It's it's going well. It is poised. We got, we're looking over our shoulder constantly to see what's happening, and it's not a good state. And there's a lot of stocks out there you can see. If you just go through, I'm just going to check a few, sort of the mid-tier ones. You can look at the volume on some of them. There's not a lot there, even though, they're quite big. Well, there's one that I've been watching, TPM. I don't mind that, but there's not a massive amount of volume on the... Well, actually, there's a bit on the... It's just sort of stacked up on the offer. it's really hard to get something if you need some volume to lean onto, especially in this type of market, and there's no real volume on the bid. There is some, obviously your big caps, your blue chips and stuff. The ones I'm looking for is trying to get that momentum plays. They can look okay, but then they just sort of tend to struggle a bit. I think Spark was SPK. That's actually got a bit there. That's not one of them. So there's a bit on the bid and the offer there, but they're coming up into the earnings. I think it's due later on the month. That looked pretty good. So yeah, that's just the way I'm viewing it at the moment. I still think we're going to keep kicking higher. I think there's a select sort of amount of stocks that are dragging us up there. There's been a lot that have been and done and correcting at the moment off their highs. So trying to find those ones that are going to give us some good high probability setups and potentially are going to continue to kick higher. I'm personally finding it a bit tougher to find those and when they do kick on, getting that momentum up and kicking higher. But at the moment, it's more of a bit of a struggle. So we'll see how that goes. What I'm going to look at now, we won't get into, well, that's the ASX anyway. We won't get into the other markets. I think we know that the US is trading at all-time highs. They're ticking along nicely. The NASDAQ was up. The broader market was up. I think the Dow lagged the most. They had some good earnings from some tech stocks, which dragged the NASDAQ up. And that's traditionally got a bit more volatility than the rest. We'll get on to what I was looking at the other day. I just want to get on to oil. Not saying, I was looking at the other day and we're starting to look at it thinking, a lot of the sectors been just grinding around, holding minor lower highs and minor lower lows, sort of just edging lower the last, 6 months or so. I'm just got to find the actual... what actually is it? Let me just find it. Just be 1 second. I don't want to go there. Sectors, energy, XEJ. So that is a daily chart. So you can see, the good part of the year. It had a bit of a kick up at the start of the year, and that was after that big sell-off from about September, October last year. Sell-off into the end of the year, bounced to the rest of them, but it's been just contracting. It's been really held down. More for me, I think the supply-demand, obviously, supply's backing off a bit. You can see the US inventories were down more than expected. I think at last glance, they do chop around a bit, but they're generally sort of edging lower. The problem is demand is being constrained, constrained by trade. A lot from China. Everyone's sort of looking at that. When's that going to end? They're going to pick up in demand. So China is a big one. There's also Mexico. If tariffs continue to be put on Mexico, that's going to make oil prices just put a bit of a squeeze on demand as well. So you can see oil prices have been. We'll take a look at the chart in a second. Have been well contained, and it's been fairly choppy. There's traditionally some factors which should have kicked it higher. The Iran problems should have kicked it on a bit, but it just didn't get on. It didn't really do too much. That should have brought some buying into the market, but it's the demand issue and the trade issues that have really been constraining oil. Now, looking at it, if we do get a bit of love, or we can see some light at the end of the tunnel between China and the US, if they can come to some sort of terms and start working towards agreements, start sorting their stuff out, rather than keep threatening higher tariffs. If they threaten higher tariffs, then I think not much is going to, we're going to get the same sort of picture going forward into the end of the year with oil, a bit of a spike up, a bit of a drop off. When we saw the US dollar, if you looked at the intraday chart on Friday on oil, we'll look at that. Actually, we'll get onto that now. The intraday chart, this is a weekly. Oil dropped off with a rally in the US dollar, but then bounced back quite hard. So it's finding some buying down there, even though the US dollar is finding some strength. So that's not a bad sign for the bulls, except it's just been contained. I think no one's really willing to put a lot of risk into the market, into oil anyway, or into the sector, into energy sector, because You know, we know that any time they could just come out with a few tweets between Trump and China, I guess, a few tweets that put pressure on the market, that he comes out and tweets we're going to raise tariffs on China, and that's not going to be good for any sort of end or finalisation into the trade war. So it's going to keep the pressure on oil. But if it does come out and we start to get a flow of news, which is going to be quite positive, I would expect crude to start finding a base. Now, looking at the charts, this is a weekly chart. This goes right back up until the big spike in 2008, where it took a bit of a nosedive there. But that was great if you're trading it up into 2008 before it took off, it dropped out of the sky. The volatility was high. It was a great time to trade. So we got a spike up to about 146, big sell-off down to about the $30 level. And then we popped up. We were capped around that $110, $100 a barrel mark. And then it tipped over. You can see that was around 2015. Traded through the previous lows, but then started getting bought up again. So on the weekly chart, we've got a bit of contraction. We've got some lower highs holding. And we got the most recent lower high around the $75 mark. And I think that was last year, was it? Yeah, just basically when the market tipped over in about September, October last year. But you can see a bit of a washout of the previous high, and then we got that tip over into the end of the year. And then we got a reaction back off, and we can see this line of support come through around that 42 mark. So I think anything sort of down towards that mark is obviously undervalued, and up there at the moment it's getting capped by pressures of trade wars and things, and just holding some lower highs. But you can see that the market's contracting in on itself. If we get into the daily, which might be a bit better, you can see these lower highs holding the longer term. We're getting these reaction back up, pushing back up. So you got sort of supply issues, lower supply, which is sort of putting the floor in the market or putting a bit of support, but tariff and trade issues that are sort of keeping a cap on demand at the moment. But sooner or later, those dynamics are going to have to change, and I think it's worthwhile just keeping an eye on what oil's doing and whether that tone of the market changes. See, down here, we're getting a bit oversold. Last time we were oversold, we're down at sort of that 50, 51 mark. And we popped up, got sort of the overbought mark. Last time it was way up here at around sort of 68. Oversold again. This is on the daily, don't forget. But we're trading around 55, 54, or say 54.75. So it is chopping around. It's going to come to a point of agreement soon. And I think if we can get that tone that changes and get a good stream of or good news flow coming through, and some positive tweets from Trump and some positive news out on trade, then I think this is going to start to lift, and then you might start to take out one of these lower highs, and then the bulls will start showing their hand if you can get some good support starting to form, rounding base or a good little support forming. I wouldn't want to see it break down out of this rising support, but longer term, don't forget, this is a major support zone through 42. It's even if we go back to the weekly, you got this major double bottom, major high low that's starting to form, which over the longer term is suggesting higher prices. I mean, that's your weekly chart, so it's harder to trade off your weeklies, I think, anyway. This is your daily. We're still getting a bit choppy up here as we sort of got up to the top end of that range, or that resistance zone. We washed out the high, took out the high low, and that was back on about the 17th. So you can see the bulls were not willing to kick it on too much, and then it's come back down. And we just want to see now if we can take out, probably best to go down to a lower time frame, just work our way down. If we can take out this level around 56, 60, thereabouts, 56, 57, if we can take out this little minor lower high, and this is on the weekly, and we're finding some minor support building through here, and this holds, and we can start to lift up from here, I think that'll be a good little positive, and we can start to break up, and we'll see if we can get a bit of a run on. Does that make sense? So we've got this is a minor contraction, the major contraction zone, and then just on the hourly, got this little minor high lows holding and lower highs. So we've got that contraction back on the hourly chart, and it's tending towards. I'm seeing this. It's choppy, obviously, but I'm seeing this zone starting to build up around 55, say 56. A buy zone in there. It spiked through. Obviously, it finished back in there. spiked down into it, reacted back off, spiked down into it, reacted back off. It's a bit choppy at the moment. You still got those lower highs coming into play. But I think the signs are, I mean, we're really going to wait to see that news flow play out and see if that can start to bring some more buying pressure in and see if the sellers to start to dissipate, start to step aside and start see if demand can start to take a bit of a fall front. I guess the higher demand and lower supply as well. There's globally, the numbers are increasing. Demand's increasing from China. Demand's increasing from the US. So the demand's definitely picking up. It's just, I think at the moment, the anticipation of what's going to happen. But if, like I said, if things change there on the news front, then that should start to lift. You would expect the market start to lift. So we're really just trying to pick out some opportunities to see where we could potentially find some opportunities for trading. And at the moment, this is this sector. So just looking at that sector, the market was picking up. Actually, I wonder if we can show crude. Oh, we don't really, probably don't need to just look at the daily chart on crude. Actually, just go back to the daily just to see if that goes hand in hand. So this is the end of 2019, so that's 2018. 2016 when we started lifting. Okay. So 2016, so it's a good little sign that the sector from about this point when crude touched that $30 mark for the second time. Over the longer term, the sector started lifting up and it was a bit, I guess it's a bit cleaner than what we're looking at just here on the daily chart here. But the sector from there just started gradually edging higher. We got a big sell-off there, and that was on the back of, you know, the market overall sell-off and the worries about demand from China and, you know, it's going to ease in demand, which is going to put pressure on crude, higher US dollar. Got soaked up pretty well. And what we're seeing, I don't mind this price action really. What we're seeing in the sector, this gradual grinding lower, it is holding lower highs, but that to me is conducive, just contracting of this leg up. So we potentially got this secondary leg up that we could be looking at, which could take us back up towards, you know, continue that trend up. If we can sort of break out and we can break through really on the sector around that 11,250. We've got a little minor double bottom here, not confirmed until we get through that 11,250. Whoops. Which is this sort of lower high. If we can get back up there and through that zone, I think we're going to get some buyers starting to step in the sector. We'll just have to go through some stocks just to see what they're showing. I was looking at BPT the other day. I don't think that's too bad. That's just the daily chart, which doesn't look too great. You can see a bit of a cup and handle there. The handle pushing up, previous highs, pushed up, forming a bit of a cup there. You got those lower highs. Yeah, so we reacted lower, took out some of these previous support zones, lower high in here, pressed down, and then started holding some high lows there. If you take a step back to the weekly chart, that coincides quite nicely. Starting to lift, it'd just be interesting if we do push down and hold another high low around that 190 to 195 mark before we start lifting. But I think I don't mind this type of price action longer term taken out or targeting through 230 on BPT, but that's obviously going to get all our ducks lined up a bit, but we'll see how that goes. What are some others? Siri's trying to answer a question that thinks I asked. What else we got? OSH, just take a look at it longer term. I mean, that's not looking so crash hot. Oil search, that's, we got a major zone around the 625. It's probably on its knees a bit down there, getting pressured lower, but there is a definite buy zone sort of through 620, 30, 40, even up to 660, which buyers are starting to step in around that support zone. Doesn't look as good. The momentum is not up. It's more sideways to down, if anything. Why did that happen? Undo that. Let's try to see if we can spell Woodside better. WPL. A bit of the same. We had this range for me, broke out the bottom end of the range on WPL, but the overall trend, it's very hard to get a run on. I mean, it has a bit of a push up and then boom, straight down again. bit of a push up towards the highs, and then sellers start to come in, and that is conducive with overall crude prices, with the sector. We'll have to see longer term what could start to play out. It's not that longer term trend is obviously, well, look, I wouldn't say it's down. It's had some lower highs coming into play, but it's just grinding up. It really needs a change in the overall global dynamics in crude or energy prices to help to lift this sector. But I think there is potential there if things can change. What's some other STO? Just glance at that. STO doesn't look too bad for me. It's consolidating around that 7 mark. I mean, that could easily pop up, quite easily, and start to get a bit of a new leg or new run higher if it gets through, 727, 730 mark, which is this little minor lower high, which you can see just up here, which would suggest it's holding a higher level here. We've got the market trying to go lower, cleaned out with this move down, cleaned out a few of the previous lows, bounced straight back up, and it's starting to hold this high level at 680. That's a good little sign. It's getting a bit extended up here, which is still, it's still contained. I think there's still some sellers in there willing to contain it. So every time they might have bought it down here. Okay, we're not willing to hold it, waiting for that trend to kick off. We're just selling the top end of the range. So it's more range trading, buying the bottom end of the range, selling the top end of the range, and try to trade it that way. And I think that's been a bit of a theme for some of these energy stocks of late. But yeah, I don't mind that at all. What's some others that we could quickly look at? Where are they? Let's just take a quick look. Wonder if I've got an actual list of them. Probably not. Oh. Not to worry. Alright, so what does everyone else think of that sector? Could potentially give us some stocks to keep an eye on. I think it's worth keeping an eye on, even though, you're not trying to... I'm always trying to keep an eye on sectors or areas where, okay, they've been beaten down, but if they've shown signs of at least sellers starting to give up, as in starting to take a bit of a break, and see if the buyers start to step in. You want evidence that buyers are starting to step in, because it's the early bird that gets the worm. It's going to be when they start moving. You don't want to get onto the trend. I ideally would like to get on early, getting in to something in the unknown rather than getting in the known. When everyone knows about it, it's starting to trend high, and you're starting to get a few higher lows and higher highs building. You've got a solid trend that started to build. I'd rather get on early when it's got those early sign, and then get some gains sort of booked away, and just letting it see how it goes. And I think with oil and crude and the energy sector, it's not getting beaten around too much. You can see this type of move I don't find that too bad at all. It's like this big move down has cleaned out a lot of traders, and maybe, like I said, like the rest of the market, the ASX, it was a bit overextended coming into Christmas on lighter volume. In that sector, maybe it should have pulled up around that 100 mark. Was it 100? Oh, well, 1,000, whatever. I think it's on Spark. It's a bit different. I think it's 100. Should have pulled up through that support zone through there instead of just pierced through. So that move down, though, has cleaned out a lot of traders into that sector, which is a good thing. You want to clean them out, put them back on the sidelines, and just see if you can get the technicals start to play out. If you get a few of these stocks, the fundamentals start looking good. They look undervalued. You've got a few either technical traders looking at them along with fundamental traders or value investors, or someone looking to buy something that's undervalued and look to run it higher. But I think the bulk of the market might be just watching it. There's going to be people getting at different levels. So ideally, if we can keep an eye on it for the early signs and start to look at some stocks, put some on your list. For example, STO, I don't mind BPT, a few, make up a bit of a list where they look good. They're actually starting to hold higher levels. So, fundamentally, they're quite sound. They may have been beaten down. I mean, look at Santos, beaten down here. That was back in 2014, right down to sort of $3. Started to lift off $3. I mean, that could roll over, but that could be well undervalued down here. I mean, I don't know any of the fundamentals of it, but you can see what I mean. It's just not at a bad level. There's been a lot of sellers have come out of the market. Sorry, a lot of buyers come out of the market. Sellers have pressured them out. It's reset itself. Maybe it's put in a nice little base through here at around that $3 mark. It's built high low, like I said, into Christmas, which could have been a bit overextended, a bit overcooked. It's rebounded straight back up to that previous high at 750, and now it's consolidating those highs. So that's a good little sign. Like I said, that coupled with a bit of a lift in that sector, a bit of lift in oil, easing of the trade tensions, all could line up for some good yield into that sector, but we'll see. All right, guys, put in some shares if you like. I'll probably babble on enough about that. But yeah, it's worth, if anyone, any other sectors, let's just quickly go over to the sectors just to see if there's anything else that might, that's not exactly what I wanted. Any other sectors it could be, because what we're looking for, or the way my mind's working at all, is that index, there we go. The way I'm looking at it or viewing it is that we've got the market, which is, it's not on a knife edge, but I think it's grinding higher, and you can see the ASX is grinding higher. It's not going to take much for it to tip over. All the news out there there's a lot of negative news out there, and even if, say, US and China come to some sort of agreement, and they may work it out, I think that the upside could still be quite limited. You're going to get that reaction higher, but I don't think it's going to be as good as what everyone's making out, because since the start of the trade war, we've actually been going up, grinding away higher, and the US especially new all-time highs again. So it could be limited that, once that gets sorted out, the upside could be limited. It could still take a long time. We still might grind higher. The US dollar has bounced back a bit, but it could. They're really just looking for rate cuts. Now, if the data coming out of the US is not too bad, yeah, it's slowed down a bit, but if that can be attributed to trade and tariffs, then they haven't really changed. They're probably where they should be now. So I wouldn't expect too many rate cuts. We've got one coming up, but I wouldn't expect too much more. So how much sort of upside can that produce into shares? So all in all, the market could tip over fairly easy. It's been, when you're up at new all-time highs, yeah, it could push through, but I don't think there would be much to tip it over, and everyone would be chasing, running for the door to lock in those gains. And the same with the ASX, we're just, grinding up to the all-time highs as well. There wouldn't take much for people just to go, all right, we've had a couple of savage days, I'm going to start locking in some gains. Doesn't matter what the fundamentals are, what the macro environment is. If they want to lock in gains because the fear's starting to kick in, that's going to happen, and the market could tip over quite quickly. So if that's the case, you don't want to be jumping the sectors that have been hot, because I think they're the first ones going to start, where people are going to lock in the gains and really start hammering those sectors. I think you want something that's been quite neutral for quite a while, and I see oil as one, or the energy sector as one potentially, which could start weathering the storm quite well. I don't know what have we got here. I mean, consumer staples, I wouldn't be getting to that. That's well and truly, that's had a good run up since, not even the start of the year, but a strong run up since June, through June, July. That's energy, sort of been grinding its way high. It's been capped. We've just discussed that. Consumer discretionary up at the all-time highs. Financials have been working their way higher this year. It'd be interesting to see how banks go too. We'll see how that goes. Healthcare, new highs. That sector's performing well, has done very well this year. Since the sell-off in October. IT, we're up sort of back into those highs again. That's had a really good start to the year. Got a bit ahead of itself back in, was it about May? Backed off there, bit of a clean-up. Reset itself back into the new highs again. But that's, again, we're up at highs there. IJ, materials, mining, they're at highs. Materials and mining, so they're up today as well. They're not performing that great. Resources, struggling up here. So that could be a sector that could go well. If the US dollar can reset itself and start if it does start to back off, then resources should start to find some well, we'll see. It just depends what the overall market. There's a few factors to play out, but US dollar, a weaker US dollar could help. XJR utilities, that hasn't been doing that great, so that could be something to start to look at. Telcoms, I think. Telcoms, that's your weekly. They haven't been the flavour since the start of the year. They've been grinding back up, but a lot of heat's come out of that sector. So potentially, that's an area to focus on as more of a defensive. If there's not much going to happen, if the market's going to tip over, I wouldn't expect this sector to cop the heat too much. Gold has had a good run up, as we all know. Gold prices, emerging companies and industrials are all right up at those highs. So we'll see how that goes anyway, but it's worth just start to focusing in on those sectors, the underperforming sectors, to see if they've got any value there. Where are we? So what do we got? VRT. Let's have a look at that one then. Gino. So I hope it made some sense there. I think it made a bit of sense in my head, whether I could communicate that well. Excuse me. Just, eyeballing that weekly, it's ahead of itself up at this stage. We're overbought up here. Let's just go. I'll get my drawing tool up. One and two. There we go. So we've had, clear level, double top at around the 840. We've had a big pullback, big bounce back up. So that's formed a double top. Selling come through. We can see that move down to that previous low. It just couldn't hold there. Sellers kept coming in here, which was a level of resistance back then. It started to try to work its way back off, but this was a real struggle. Once it started forming that range and broke out to the bottom end of the range, I think anyone that was started to buy it through here expecting that to take back off to 840 was sorely disappointed. And you've got that breaking out the bottom end of that range and really squeezing out those traders through, pretty much built up through that 2008 consolidation pattern, squeezing them back out. We pretty much gone down to sort of that 380 mark and bounced. All right, it's probably about that May, June. It's probably about May. Yeah, we just turned around and bounced. I think that's 2018, isn't it? 2019. There we go. So we've had that bounce. So right up here in this zone, I wouldn't be a buyer just by eyeballing that weekly chart. We're sort of coming back towards that breakout zone. This is all technical, of course. This is not fundamental. Fundamentals could have changed completely right back there, and whatever issues they may have had that saw sellers really drive the price lower have been worked out of the system, cleaned up, they've reset, and we're starting to build again. Actually, if I just get the volume, I want to see some volume. It's important to... Okay, so we've had the volume pick up a bit. Not really on this rally. It did pick up through here. We sort of volume pick up this little high, pull back, supported the MAs, started pushing back up. We've had volume just kick in again. The end of this run up, whether there's a few more sellers taking the opportunity to get out up here at these higher levels rather than down at 4, they're looking to get out at 5, 5.10, we don't know, or whether there's just more buying interest that's come in is yet to be seen. But it's definitely on the rise up. And if you're going to have a bit of a trade here, you probably, you bear in mind that the weekly's probably overextended. We might need some heat come out of this move up. Bit of a pullback, reset, more of a macro correction. By macro correction, we mean a little minor lower high. So you're correcting this overall leg. At the moment, we've just got pop up, pull back, high, low, pop up, pull back, high, low, pop up. So it's just all part of that one trend up from about that $4 mark. If we can get more of, we've had this type of thing. Macro correction is more proper corrective action. So your legs are, that's one leg up, secondary leg down. And what we'd be looking for is just to see if we can do that. So that could be what's on the cards potentially from this level. Pull back if we can build a major high low, maybe 420, 30, 40, 40, 50 mark, 50% of retracement of that move up, and it starts to hold. and then on your dailies you're getting some high lows starting to come in, some interest from new buyers, then that's what I'd be looking at. Right here, if you want to have a crack at it, you know that you're just going to pop your stop below that high low. You know, potentially if you're going to buy it up here at 5.11, I'd be putting my stop. I wouldn't give it too much room at all just because of the weekly charts, and see how long that trend up can continue. But if you want more of a macro correction, especially when the ASX is up at all-time highs and the overall macro environment is struggling a touch, then yeah, don't give it too much room, in my view anyway. AIA. Do you know that's this has been one of those stocks, a good trend high, and this is, you can see through here basically from mid to end 2016. Once we got up through that 775 mark, it went macro corrective. And macro corrective doesn't have to be a big pullback. It can just be correcting sideways off lower highs and really starting to churn on those late buys into the market. It might just look to take some profits. Some new buyers starting to come in once it starts resetting itself and looking for that new leg up. We have pretty much since the start of 2018 started to lift, and I'd say this is obviously it's a new leg up, but it started somewhere around 2018, the start anyway. Now we're a bit long in the tooth in this move, and you can see when it starts going more parabolic, that to me, it's running out of steam. This leg up's running out of steam. We might be going into another macro corrective phase, and whether we just have this big pullback or what, I'm not sure. We don't know what to look for, but I just think probability-wise, buying up here is low probability as opposed to high. It could keep going, I understand that, but probability perspective, and we're potentially getting that lower high coming into place here. It's like buyers were in control. Buyers are still in control, especially going through that move late June, mid to late June. Really in control. Sellers start to come in. Okay, buyers start to try to take control, and then we got sellers capping it below 940. Not a good sign, because what that's going to do is start to, anyone that's been buying it through here, they may be thinking twice, going, okay, if we saw that sort of price action down here, okay, that's not so bad at all, because we potentially at the beginning of a weekly trend up. But when you start to see it when it's going near vertical, it's not a good sign, because that's going to start bringing in some more sellers that wanted to take profit, book some gains for whatever reason. Maybe it's overvalued now. We don't know, but I think technically it's starting to show a few cracks. If it can hold up here and start to lift again, and it's got to get up through those highs to perk the interest, say around 932, then great. It could just be continuation, and then we just look to see how far it goes. But if not, this could lead to sort of some, and this is, again, just looking at that weekly chart, good leg up, macro corrective, good leg up, maybe macro corrective, and whether we go macro corrective sideways and spend the next, who knows, a year just sort of chopping around before we start holding some higher levels like we did in the start of 2000 and late 2018, I wouldn't want to be involved in it through that period. I'm not one to sit there and just hold these stocks. If it doesn't do that, it could easily just boom, straight down, depending on what the overall environment does. But I think this one could come under a bit of pressure. Well, potentially come under a bit of pressure if this market does turn south. If it doesn't, yeah, it could still just go consolidate sideways or just continue to grind up. But looking at that daily, that's your weekly. Just going on the daily, I'd just be holding the powder for a bit and just waiting to see. But that's my very cautious tone at the moment. If you're more aggressive, go for it. EOF. Oh, look at that. Who's that one? Laurent. Is this something you got into? Obviously news driven today. So that's a tough one to trade. It was looking okay. I mean, I don't know how you would have bought that. You could have bought that on an intraday basis. Just to look at to see what volume. 1.6 mil volume's picked up today is a good sign. Positive news. Look, you could have bought it into the close potentially on Friday, but I think that was, I mean, this is not the way we trade anyway, it's the way I would look at it. But you can see, this is the half an hour chart over this period. It's backed off. You can see from the highs at 350, about 350, backed off. Had a little pop up, found some more selling pressure, so it started grinding its way down. And again, this is what we were saying before. We mentioned this a few times. Look at the descent, the angle of descent. Angle of descent was here, so the pressure of selling is a bit higher, whereas this angle of descent is a lot lower, and it come down to the same level, but over a good period of time. Well, it's only a few days really, but a week or so, it grinded, and then it's touched on that support zone once, twice, 3 times before that action on Friday started to lift again. So that's a good sign. Touching down there a few times, it can't break through, then it lifts on Friday, good positive action. It basically lifted from the open, consolidated through the rest of the day, consolidated those highs, and I think the market was down Friday, wasn't it? Oh no. Yeah, the market wasn't so crash hot on Friday. It consolidated through there, but I still would have liked to have bought it into the close. It would pop up through that little minor high, so it would have been a tough one personally for me to buy into the close. The reason why you would, I would expect, would be more, looking for that second day strength, and you're more looking at wondering why that obviously the news is coming out today, but looking at it going, well, hang on a second, we've got some good price action, good run up, had a pullback, clean out a few buyers, popped back up. Buyers tried to go again. Sellers were still pressuring market down, but run out of steam, somewhere around 280, 290. Run out of steam here. It lifted today. So if you're looking at that, you've got this essentially double bottom on the daily. Let's just go back to that daily through here, through that 280 mark. And Friday was a positive day. You could just buy that into the close, just holding it on anticipation that something's happening that you don't know. But that's the only real reason why I would have bought it. And obviously you're pleasantly surprised today when it gaps up and just keeps going. It's up, 14% today. So that was at the moment, that looks like it's going to target through those highs. And potentially with that news backing it, and if we start to see the volume pick up, primed on the daily, on the stochastics too. Last time it was sort of in that oversold territory was when it was trading around $2. Then it's oversold around 280. So the strength is in the buying side. The bias is up. And if we can get a bit of a pullback, build a high low here and start to go, I think that's going to easily take out, was it highs at 360? If that momentum can continue, but we'll see how that goes. Keep an eye on that one, Laurent. PNV, I know that's one that gives me the irrits every time I look at it. Only because we've alerted to it and just didn't get in it. That was the entry back at the start of the year. I think it was somewhere around here. Looking at bouncing off the MAs, you could have easily taken entry there and been quite happily from 80 cents, doubling your money up to 160. And really, you got all the way up to 190, the highs, without coming under pressure at all. The market popped up, pulled back, high low off the MAs, popped up, consolidated those highs, but you really weren't stopped out if you were looking at your stop low here when it got to the highs there. Consolidated, went again, high low again, and it just kept holding high lows all the way up, pull back to the MAs, not really squeezing you out. Straight smack back on the MAs, took off again, held higher levels up here, continued day by day, just holding higher levels, buying interest, popped up. First sort of time you come under pressure was obviously on this red candle. Was it the 16th of July? And maybe the way that sold off from the 9th, first sign of sort of cracks appearing and people wanting, when the market, the ASX is up at all-time highs, towards all-time highs, wanting to book some gains and call it a day, or some partials. Now, the more people that start thinking that way, and personally I wouldn't be buying it up here because it's been stretched, and look at the weekly, that sort of run up since, that 70 cents mark has been a cracker. Whatever the fundamentals are, that's probably overcooked, and you want some heat to come out of that market before it starts resetting itself for a new run higher. So weekly, overcooked, wouldn't be buying it up here, which may lead to more buyers to start locking in some gains if you've held it through here, even through above $1, even $1.20. You've got a lot of buyers built up through here, buying the known, trending higher, did quite well, but sooner or later there's going to be some pressure on them to potentially either stick to the guns and hold it and run the risk of this coming all the way back down to $1 and doing nothing, especially if the market turns south. They could be chasing their tail and just wanting to get out. The buyers just dry up, disappear. Sellers, everyone's loaded long. There's no new buyers sitting there trying to soak up that selling pressure, and the sellers have to give up, a few percent to get out and try to book that gain. If the market starts chasing itself lower, and once that damage is done, I think it's going to take a while to repair itself. So if that's what plays out, I think that'll be on the back of the minds of a few people who've been holding it long. Anyone that's actually trading it, not just a buy and hold type of mentality or strategy. It's actually trading it, knowing that when you start to get overcooked, what do you want to do? You just want to book some gains. A partial, a full, who knows, a third, whatever you want to take off. But that's why I'm viewing PNV at the moment. I just think it's a bit overcooked. There's a lot of stocks like this, had a good run up, getting a bit overcooked. You just got to be wary. What's the probability of this continuing higher when the global markets start? I mean, the US goes higher, that could tip over tonight, could go higher tonight. You just don't know. There's nothing set in stone at the moment. What was next? PNV. Let's look at some of these quickly. CXZ. Now you got some cracking little ones there, Magna. Small, very small cap, isn't it? Done a bit of volume. Cracking volume the last couple of days. So what's happened? Oh, look at that. 26. It's obviously a good report, I'd say. It's just that second day play today. That for me is well overcooked, but it's not my kettle of fish, but the actual overall strength is there. So it'll be interesting to see what happens if it does pull back. What happens on the pullback? Is it going to get supported? Or, with a bit of volume, is it going to have to reset itself like this and spend the next few months doing nothing? Who knows? But yeah, a bit overcooked at the moment, but obviously quite good. BD1. This has been a good one on Twitter. And IHL. That structure looks good. It hasn't really got supporting volume with it, so it could just be dragged higher. Might just be getting pumped. Who knows? I don't know what they do. It'd be interesting to know what the actual. But I don't mind. What I don't mind at all, really, when you look at it, see this volume that comes screaming in here, and it just took off. Traded straight up to 7 cents, then boom, straight back down. It spent a good amount of time, pretty much the start of the year, repairing itself. But this is a bit more contained. This price action is a bit more contained, which could be good. So obviously, I wouldn't touch it just yet. I think this leg up, if that, you just can measure it from the pullback to where it could be going. So from low to here, high to there. This is your new low to high. It's probably getting a bit long in the tooth in this move up. Could start getting a bit of head of steam and just running up. But we'll just keep an eye on it and see what happens. The structure's in place there at the moment. A bit overcooked here. What's the weekly saying? I mean, looking at the weekly, you've got a major high low that's built through 1 to 2 cents. It's a real specky, this one. So it's not on the cards for a lot of people, but you can get some good returns. This is one that you'd want to be knowing exactly what the fundamental story is. It's got to have good fundamentals, got to have good prospective cash flows, I guess, debt, low debt, all these sorts of things. You should be careful of capital raisings with these. They could come out and be pumped up. Cap raising brings it back down again. It's stuck for a while. You got more people in the market that willing, just take out some of that cap raising liquidity. We'll see how that one goes. What have we also got? IHL. Yeah, again, nice structure. Getting ahead of itself up here, I'd say. It could be doing that, shooting up to 10 cents, which obviously gives it about 20% gains from here. Could be doing that 10 cent mark, oscillating between 10 and 10.5. As there's a lot of people that will be playing that 10 cent level. As we know, it goes in 0.01 of a cent increments up until 10, then it changes to half cent increments. So they do play it a bit. This could be one prime to get played. Who knows? But we'll see. Weekly structures really just took off. So again, this is the same sort of scenario. You'd want to know. I'm guessing Magna does know what exactly they are. What exactly the fundamentals are saying. What prospects they've got. But either way, it's hasn't broken down. The anchor to that uptrend is just below 5.5. So if you wanted to get into it, you'd be looking for that pullback to see how it can settle. Something that's a good pullback. See if it starts to find some volume again, like we did back here. Bit of a pullback. That volume is starting to lift and seem to run up, and just taking a punt. IHL, 5G. This was one interesting. They've copped a hammering there. So you'd want this to really. This for me, I think we had this somewhere. I don't know. Actually, I'm gonna have to check. Do we actually even have it? Or we just alerted to this quite a bit. No, I don't think we ever had this, but anyway, it was a good stock under a buck. I think that trend up was quite nice. It's trended up. It's had a long time, pretty much since the start of the year. When it was trading below 50 cents, it started lifting. This around February, start of the year. February started holding higher lows. That was your first weekly pullback to the MAs when they crossed, and daily MAs. It's touching on the MAs and started to lift from there. So that's great. But that's a long term. What 1, 2, 3, 4, 5 months or so on an uptrend, and now it's just starting to, the cracks are appearing, and you can see that any of these buyers that might be running into low liquidity as well. There's a bit on there at 107. It's quite a bit. Yeah, that there's a bid there you can see at 102.5. Wouldn't take much notice of that. I reckon they're stacking the bid there to try to get some more buyers into the market at 110, potentially just to sell to. Who knows? I reckon if you're going to be buying it around here, it's obviously bargain hunting, but that move down is going to clean out a lot. I'd want to see how it resets itself. I think this is the beginning of a macro correction. It's below the MAs. You don't really want to see it below the MAs. That's going to draw a lot of attention from sellers as well. Maybe it gets a bit of a pop to 130 and you get more selling coming and push it down again. Who knows? But yeah, you'd want to see that hold some higher levels. I wouldn't mind seeing a sharp sort of a correction, and then on the next pullback, see what it does. If it can hold a higher level and look at this, view this as a macro correction. If it's a macro correction, you do want a good move lower just to clean out a few of these buys and this trend up on the weekly. That trend up there, macro corrective, it's got to do a lot of work in my book from here just to hold some higher levels and start to work its way back up to that 170 mark and see if you can really know exactly where you can get in, know where your risk is. But good volume. You can see the volume on this move down. Not a good sign. That's just sellers bailing. Sorry, buyers bailing. It's not a good thing to see. There's no real buyers standing in the way, especially the last couple of days. Any news that come out? 5th, 26 quarterly. So the quarterly wasn't good. That's all you can take from that. Or maybe it come out in line. And it wasn't. People were expecting something better. And you need something better when your quarterly comes out and it's been running up quite hard, and your quarterly doesn't come out and beat expectations, then there's no real reason to people want to start locking in gains, especially in the current environment. What else we got? Enough. It's probably the weekly you'd want to be focusing in on. Potentially this is becoming in a zone where it could come into some selling pressure, but it's the same as when you're buying late into a trend. If you're going to sell, you're selling late into that trend down. Or, if you're going to get out, you've got to, if you're long on New Farm, you've got to question, is it the best time to get out when it's, I've taken all this heat, or maybe you just bought it at about 525. Is it the best time to get out? You're probably going to have to put this one away in the drawers. There's some volume that's been coming in. Well, it was from about 18th or so. Some good volume compared to that move down. It's getting soaked up. So when the selling's initially starting, you're going to get a bit of volume, but it's when volume starts picking up on the downtrend, when people are starting to build a position or starting to edge into the market, and the volume starts picking up when it gets down to the lows. Now, it's just starting to do that probably with that move down in March, a bit more sort of in this push down, starting to get soaked up a bit. So you want to see the sellers getting soaked up if you're interested in it. At the moment, I wouldn't just go near it on the daily if I'm looking to enter. I want to see the weekly hold a higher level, and it hasn't really at the moment. You've got this good sell-off here. It's quite a savage sell-off, and you've got this corrective price action. Okay, you can say that's a high level just from this green candle, but to me, that's more of a secondary leg up before it continues the downtrend, which it did. Your key level for this downtrend is up at 550 mark, this 550 zone. Let's just mark that up. Let's just mark it up on the weekly. Don't worry about the daily for now. So it's just what I would be looking for. It's a key level, say through. I like it better than that. There we go. So that's your key level. You can see down, up, down. Took out the low. The good thing is it didn't take out the low by too much. This was the previous low, and you can see it pretty much went through that same distance, I guess. What, 60.50 down to 5, about $1. Push through 5.50 down to about 4, so even $1.50. So it really extended. That move down was extended. So the way you're looking at it is the buyers weren't really trying to step in then. Now they bought into it here, but this time they were starting to soak it up. You can see that move down. They weren't really letting it, if I can spit that out, get through those lows too far. They were starting to soak it up, and you can see that selling pressure. Yeah, a good strong leg down, healthy leg down. It wasn't really getting soaked up by the buyers. You can see oversold. This time around we are starting to get it soaked up, because when it's come down to oversold, the sellers are coming in, they're pressuring the market, they're pressuring price lower, but it's not getting down too far. So what you'd be looking for, we've just had a bit of a pop up here. I'll be looking for, I want to see these levels tested up towards 550. Maybe if it can break through 550 and then see what happens in the first pullback, and see if we break through that 550 mark, I think that's going to change the dynamics, and it's going to start bringing in a few buyers that are going to be watching, thinking, okay, we've had a good run down from the highs. We've come down to say 350, which is probably some key support zones. Yep, see that sort of 350 mark? You can see it's touched down out through 2010 right up to 2015 before it started lifting up to $10. Comes screaming back down to that zone again. So it is potentially a value zone, but we just need some price action to start playing out and show us, especially on the weekly charts. I'd be looking more at the weekly charts for now. If we can get this type of price action that breaks through 550 or even retest 550, and if it starts to back off and then you get this kind of action at a higher level, then yeah, you'd be wanting to look for this to start curving up above 4, maybe 450, 475. It can show some strength in buyers, somewhere around here potentially. You know, it sort of edges, it grinds its way down into that level with some minor lower lows, lower highs, grinds its way down and then starts to hold a higher level, minor higher level. So this is a major higher level with some daily, potentially some daily starting to lift out of that zone. And that would confirm that buyers, to me, are starting to show some interest and starting to lift that stock up. And then from there, it's really just, yeah, what are we going to do around 650? What are we going to do around that 950 mark? And up towards, you know, potentially $10, but we'll just keep an eye on it. All right, I think that's ALK. We'll finish off with ALK just to see what's happening there. Looking a bit better. Obviously, the weekly's got ahead of itself, and you don't want to get caught. Nothing like what we saw in 2016. 2016, you'd hate to get caught up there buying it and then see this getting smashed, holding it, you know, on the back of hope, not anything else, holding it on hope, and boom, straight down to 22 cents. And you spent the next few years just doing nothing as we got a bit lower. Bit happy as it's popped back up to 47. This move is quite good. I would have found this a tad hard to get onto, potentially just in here on this green candle. You know, your risk is just below so that 26 zone, so 25. Breakout through those highs at 28. Not much risk. You never come under pressure. Saw it rally all up to 46. Great. This action's not too bad. I don't mind this action off the highs. If we look at sort of what happened up here, this action's a bit different. You can see it had a good run up and then a couple of savage days down. A bit of a reaction up and then some more savage days down. That's not a good sign. Whereas this action, you know, red day took out the highs, negative day on the end, green day, red day, green day, red day. That action's not too bad. So potentially it could be getting held up around that 36 mark. And if this takes more time sort of consolidating above 36, then that could be something really to take just to keep on your radar, because that could potentially have that secondary leg up, which, you know, around here we could be looking towards that 60 cent mark quite easily. Drilling at Peak Hill, so I guess it's going to be news based. If I get a couple of good news flow in here and this market holds up here, so what's that showing when it's holding up there? It's just showing that buyers who bought it through this level are not willing to get out yet. They obviously know the story, they know the fundamentals, they're just waiting for that news flow to start coming through, more buyers start edging. They may get squeezed out of the market if there's a long time between drinks or between news, they could get squeezed out, but it's just showing the strength. And anyone that sort of missed it in that run up, it's edging lower. So on the daily, they maybe missed that run up. It's edging lower. They could potentially be soaking that up around 38 to 40. But we just have to wait and see. It's still holding lower highs, so the pressure's on still. And this could just grind its way down, take out sort of 37 mark, and then pop back up, hold another lower high, grind back down, and really retrace a lot of this leg up. Or if we see a high low coming into play above 37, this zone, then keep it on your radar and just see what happens. If it starts to break up again, then you want to see it target through those highs at 48 up towards that 60 mark. But we'll see. All right, that was probably about it. I think we've got through a bit. See where the market is. It's up 26, so we're bouncing back again. Let's look at the intraday action. Is that 5 minutes? Let's look at the minute. So this is Monday. Rallied on the open. A good squeeze lower. It's back up again to 68.20. So it pretty much turned. What time was that? 12:30. There's probably some news out around 12:30, was there? Not sure. No, nothing really came out at 12:30. So it looks like it's just turned on a dime there. Edged its way down, bang, up we go again. Let's just see what the 30 minutes sort of saying. So it's still, it looks like this market wants to go to the all-time high. That's all. When you're seeing these higher lows and it's sort of the way it's turning like that, it's not getting soaked up. It's just bang, up we go. Up, down, those sort of V-shapes. Never trust a V-shape recovery. I would rather see it getting soaked up. So, and by soaked up, you mean a pullback. Pop up, pull back, higher low, and start to build that sort of cup and handle type of structure. Whereas you just get these pullbacks that's met, bang, up we go again. Yeah, you can never quite trust them. But we'll see. We'll see if this market can finish on its high above that opening high around 68.22. Only a few points away. But yeah, I wouldn't think it's long till we get to target those all-time highs. We're only about 30 points away now. Yeah, so market up 27 at the moment, 68.20. We'll see if this can hold today, see what the US does tonight, and just see what the night brings us. The banks don't look too healthy. It looks more contracting off the highs, so not really getting supported by the banks. Same with, even though it's bounced back up, struggling. Oh, look at that CBA's looking a bit better than the others. I'm on the 30, aren't I? NAB. We're on the 30-minute chart, just the intraday charts. Yeah, that could start to top over. On the dailies, they're looking a fair bit weaker. Yeah, we're stretched on the daily. On that's NAB, ANZ. Potentially, we're getting stretched up here, away from those highs at 29. So it's not a really good sign. CBA up towards these previous highs from June. Again, we're stretched up here, running out of steam up there. Have to just keep an eye on that. The banks, see what happens over the next few days. Anyway, we'll finish up there, guys. Thanks very much for joining me. Hopefully next time I can get that headset charged up. We don't have that problem again. All right, thanks for joining me. We'll be back in on Monday at 12:30. Any questions, feel free to send us an email to support@tradesetup.com.au and we'll go from there. All right, guys. Have a good rest of the week. And remember, on Thursday night is the US interest rates. So Friday could be a bit of a struggle, just depending on what they do that night and what they come out and say. But just be wary of what's going on at the moment. Oh, sorry, Jane, I just saw you in there. Yeah, so just be wary of what's coming up and how that could affect us. I mean, I'd say if we hit the all-time highs on our market prior to Thursday, and Thursday doesn't come out good, it could be a bit of a rough Friday for us. If the Thursday's not good in the US, then we could have a rough Friday. Even if it was sort of, it doesn't rally, but it doesn't back off too hard either, we could struggle on Friday again. But we'll see. Anyway, hopefully the week brings us something positive, and then we'll be back in on Monday. Have a great weekend also. Cheers, guys. Bye.